Merchant account pricing can be a little confusing and maybe a little overwhelming at times, so I'm going to break it down for you in plain English, or at least as close to it as possible, and I'll show you how it works, tell you what interchange is, and how knowing this information is important to you if you're going to be accepting credit cards at your business. If you're familiar with merchant accounts or you've researched pricing at all, you've probably heard the term interchange or interchange pricing, and that's because it's at the core of every pricing model that exists in the merchant services industry. So let's just make sure that's understood right up front. Every rate or fee that's charged for accepting a credit card payment online or off, no matter who the provider is driven in some way by interchange. So let's start with a simple definition. Interchange is a schedule of fees that determines the price and percentage rate, referred to as a discount rate, for accepting credit card transactions. There's literally hundreds of different interchange categories, each of them holding a different rate and transaction cost. Interchange is kind of like what the prime rate is to the mortgage or financial industry, in the sense that it's the same for every single processing company, and it acts as a base cost for accepting credit and debit cards. Generally speaking, every processor complies with the same interchange rules and rates. However, each processing company does have control over how the transaction is processed in terms of the cardholder data that is captured and sent for authorization, as well as the security that surrounds that transaction, and that could affect the rates that you pay. And just to clarify, when I say the security that surrounds that transaction, I'm talking about how secure the actual credit card data is when it's sent from the processor or the point of sale device over to the bank for approval and back again. The top level security for this process is going to be called point-to-point encryption, and that's also something that not every processing company has access to. So with that in mind, it does matter what processing company you use. So for my recommendations on processors, be sure to check the links in the description. So how are rates determined? A single interchange rate is paid every time a transaction is made, whether it's Visa, MasterCard, Discover, or American Express. Some rates are lower than others because, for example, they're determined to be less of a risk to the card issuing bank and less likely to have a chargeback occur, for example. Some of the most notable factors that determine the exact cost of each interchange category are the type of business and the SIC or MCC code, how the payment is accepted, whether it's face-to-face or over the internet, for example, the cost of the sale, the average ticket or a purchasing card, the type of credit card such as a business corporate card or an individual consumer card, the processing technology like interchange optimization for high-speed connection, and finally daily settlement. So when a card is presented at the point of sale, it falls into one and only one of these interchange categories based on these qualifying factors. It should also be noted that interchange rates are subject to change, and the card brands publish these rate changes 2 times per year, once in the spring and once in the fall. So let's look at the individual fee and where the interchange fee goes, who it's paid to, and how it's split up. Throughout any given transaction, the fee that is collected is split up basically between 3 parties. Number 1 is the card issuing bank, which is the bank that gave the customer the credit card. Number 2 is the processing company, also known as the acquirer. And number 3 are the card associations, the brands, in what's called dues and assessments. The merchant services provider pays interchange directly to the cardholder bank, so when you hear the term interchange or pass-through pricing, this is where it comes from. The merchant account processor simply passes through those exact costs to you just as they were paid to the issuing bank. The rate and fee structure that you pay for your merchant services is based on the variables I outlined before, as well as the technology solutions offered to you with your merchant account. Now, here's the good part. How does knowing all of this information benefit you? Well, simply put, knowing this information allows you to take part in or engage in best credit card acceptance practices to help you achieve lower rates. In other words, you can take advantage of the things that you can do to help qualify a credit card into that lower interchange rate category. These are things like using address verification service, entering as much credit cardholder data as possible, such as that 3-digit code on the back of the card, billing zip code, and even the full address of the cardholder if that situation is applicable. And this may only apply to certain types of point of sale equipment or virtual terminals, but if you can, you should enter that information. Number 3 is daily settlement, settling your terminal or your virtual terminal or software service every single day so you collect your money daily. Number 4 is always swiping or dipping the card when possible, and this is applicable only for card present and retail environments. And 5, using the void transaction function instead of refunding transactions when possible. Additionally, there's a way to optimize your rates if you're using an Interchange Plus pricing program and you're using a processing company that allows for this special optimization and rate reduction. And by the way, interchange optimization is not available with aggregator payment services like Stripe, PayPal, or Square. So how does interchange relate to you and your monthly statement? Regardless of your pricing structure, whether it be Interchange Plus or tier-based pricing, you always want to pay attention to the end of the month fee, which can be used to calculate your effective rate, and that is listed right on your monthly statement. So when your statement comes each month, you'll see interchange categories listed on it along with associated interchange category labels. So on this statement, for example, categories like Merit 1 or Merit 3 debit or CPS Rewards 1, for example, those are all interchange categories that exist for specific credit cards that consumers are currently using to pay you with. So as I mentioned before, a single rate is paid every single time a credit card transaction is accepted, and each transaction needs to quote-unquote qualify for all of the requirements. In other words, they need to meet all of the benchmarks of each interchange category in order to meet that category rate. So here's the posted interchange rate table from Visa, and in this schedule of fees, you can see that CPS Rewards 1 category right here. The chart gives you requirements for the interchange category, limitations on card types and industries, and then the associated rate for that category. These rates, again, are what show up on your statement, just like in the example that we just went through, and quote-unquote passed through to you from the merchant account processor. So by knowing how interchange works, you're able to play the game, as they say, within the rules that are there for you to take advantage of. So use the card acceptance best practices and these suggestions that I've laid out for you to help ensure that you're doing everything that you can to pay as little as possible. Now that you have an understanding of the foundation of the pricing for accepting credit cards, the follow-up video covers the 2 main pricing models that exist in the merchant services industry. So click the link in the description to watch those videos, and comment below if you have any questions at all on Interchange Plus pricing or interchange rate categories in general. If you're new to the channel, be sure to give this video a thumbs up. That always helps. Be sure to subscribe so you don't miss any new content when it's released. And I publish tutorial style trainings, how-to videos, and strategy videos on the topics of payment processing, merchant accounts, invoicing, and other software tools that make the process of collecting payments from your customers simple and easy. I'm Brian Manning, and I'll see you next time.